follow your logic. The fact of the matter is when you tax capital gains at a higher rate, you create a phenomenon that economists call lock-in. What that means is people do not want to sell their appreciated assets because they want to avoid the high capital gains tax. And by locking in assets, what happens is now these assets are committed in inefficient ways. You want the value of assets moving through the economy in the most efficient way possible. When you don't tax capital gains, then you free investors to move their money from this investment to that investment where it's going to create the most gain for the marketplace and thus create the most jobs.